All right. Testing ABC 1 2 3. Testing ABC 1 2 3. Oh wow. Maybe this is working today. Super weird. I'm running two different pieces of software now. Thank you, YouTube, for making it more complicated. But anyways, I think I'm here. I think you see me. I think we're alive. I think you're being recorded. Will someone please type into the chat? Yeah. All right. Well, okay. It's overly complicated, but at least we're here. At least we're together. And like I thought, the chat is not coming on my normal software, but it's on this other thing that YouTube has forced me to use. So hey, whatever, man. Sounds like a huge success compared to what it could be. So let's go. So, welcome to the Forex.Today YouTube channel. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never, ever, 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 ever risk money you cannot afford to lose. So, hello, my name is Wayne. I am the Chief FX Market Strategist for TradersWay.com. Oh, wait, where'd the little logo go? La la la, let's gotta bring that in. Love it. Hi. Let's I think it should be like that. Cool. Hi. Hey. TradersWay.com. They love you. They want you to succeed. That's not bad for a brokerage firm, right? Fast execution speed. Nice. Competitive spreads and fees. Nice. Amazing, ridiculous, redonkulous swaps. More than nice. Super nice. Super fantastic. Awesome. Competitive advantage nice. But they also make these webinars available to you every single day. So thank you very much to Traders Way for making that happen. Please visit Traders Way and open an account today. Start with the demo, man. But pay it back. Okay, I think we got a setup that might sort of probably will mostly work. Okay. Boy, this YouTube thing. Wait, I can close this chat because it doesn't work anymore. Hang on, I know I'm talking to myself. I can move that over. Okay, now I got to drag this up. And, okay. Cool. All right, so I guess that'll do. All right, that'll do. That'll be our setup for today. Good. So what's going on? How's your week treating you? I think I'm up on this trading platform. The last time I looked, about 300 pips for the week. Some of the markets are moving, obviously, but we had to wait and be patient. Wait, where's my coffee? Oh my God, where's my coffee? Oh, there it is. I almost freaked out right there. Well, before I do coffee, let me drink water. All right. Marina, no problem. Well, it's not even a yen move, though, to be fair or to be more accurate. It's really a risk-on play, not just a yen play. So the yen pairs are up, the Swissy pairs are up, commodities are up, high yields are up. Even lira, after it got crushed on that geopolitical mess, has been great the last couple of days. Cool. So anyways, let's just get going. Okay, this is cool. Well, I guess we'll just start here. So Kiwi yen. Kiwi yen is through the weekly target. But the interesting thing, oh, I guess I should have a drawing tool. I already got it loaded. Okay. The interesting thing is like the weekly trade plan was here to here. But this is really a monthly play, as you know. Okay. And the monthly play has a target like way off the charts here. So that's always been a monthly play, not a weekly play, as you know, because this has to do with things like seasonality and such. So we're really on our way to the actual target of 70. Okay, so that's just barely 300 pips. Not a lot actually for Kiwi yen. If I get what I really want, what I really want, what you want, is that a Spice Girl song? What you want, what you really, if I get what I really want, you know, this will be probably, I'd like, if I'm long at 67, will it go to 77? And that we're going to have to incorporate November and December. Okay. So I don't know. I don't want 300 pips out of this. I'd like more than 300 pips. Okay. Dark room. Yeah, I suppose time is changing here, right? Yeah. Okay. So the only thing I'm playing here really, let's do like a Gartley type thing, right? And then at some point, let's say this will continue moving up, and well, let's say that's the high. Let's say that's it for today. Let's say it's not quite ready for a double top. So then at some point, we need to start planning a retracement and an extension. Okay. But the real news here, because we were buyers at the double bottom, what was our plan for buying at a double bottom? We need a higher high. So that's what this is telling us. That the previous high is down here. We won't grab it. Oh, we'll do that. There we go. All right, so the previous high was here. The new high is here. Okay, so at some point we need a retracement and then a new extension, because that's what bulls do, right? So that means we'd be buying it here at 68. Okay, if that makes sense. So I'm thinking about next week. Okay. So I'm long at, what is this, 67? We're at 68, almost 69. So that's cool. Oh, I gotta move my camera. Wait, if I move this, you're gonna see blue, right? Yeah, you're gonna see blue. Just, all right. Well, then I need to move this camera just slightly. Should be enough. Is that okay? Wonder if I can turn this. That doesn't really turn that way. Cool. So anyways, hopefully that's helpful. Kitty cat. Double bottom, higher high, higher low maybe. Here's the breakout type trade. You had a little bit of a chance, right? It didn't give you probably the role reversal you were wanting. Okay. But what did it give you? Well, it gave you a retracement off of that, and it gave you next week's central pivot point. but you would have been, you would have needed to have been fast. Okay. Now, how were we supposed to trade this? Well, this X we were talking about was Sunday afternoon. That's the whole point, guys. Like, now that it's moving is irrelevant. Now, I know it sort of gets you excited, gets the juices flowing, but it's not something that you should care that much about. The way I teach you is that you do fundamental and long-term technical analysis to create a bias. From that, you set up very boring standard trades at specific times, at specific prices. And if you do that, when the market agrees with your bias, you're going to get paid more. And when the market doesn't agree with your bias, you'll probably get paid a little bit, but not much. You'll certainly break even, right? Depending on how you manage that risk. And so, like, buying the week before was sort of the same thing, right? You had your prices, and then this week it worked out, but it's not because of some brilliance or something, right? It was simply you did your job. Your job was to buy it here Sunday afternoon. You got it. It went up, and you made money this week. Great. And you're just setting up the next trade. Some people, they wake up to the party, and they see like this move, and now they're interested. That's amateur. That's wrong. That's not how you do it. If suddenly you care now, you're not doing it right. Okay, your job was to be in here. Okay, like your job will be to be in there. Okay. Okay. This move here is so Sunday/Monday morning. Okay. And whoever's just now getting involved, they'll squeeze a few pips out of there, but they'll never get anywhere. Okay. Cool. Well, but it's not even like, I don't even care about that particular trade. Excuse me. It's the mental mindset that bothers me, like that there's no trade plan. If suddenly now you're interested, you didn't have a trade plan, and that's the part that's holding you back. Okay? You get it? So here's Aussie yen. We just hit our target. This was the plan we did last week. Okay? That's the moneymaker. Last Thursday, so it's Friday, 8 days ago, 8 calendar days ago, I drew this trade plan. Now, maybe I didn't do it in this webinar. I did it for the swing trading group for sure. We had this as a double bottom. I needed it to make a higher high because we were still in a downtrend. Here's a plan that didn't work, for example. So you can see we were thinking about it. And I said, as like an if-then statement, if this bottom holds and we get up here, I'm going to look for a dip down and a long up. And I'm going for this price. Cool, look, we did it. Snap, great. It didn't work the week before, but you understand the consistency. The Thursday before that, the plan was, boy, I'd love to see it break out and go up. Didn't do that. No. So I tried again the following Thursday. Oh, well, I'd like this to be a support. I'd like this to make a high. I'd like this to drop, and I'd like it to go up. And it didn't quite do exactly that. It did, it did something very similar. Okay? The thing is, like some of the other trades, is that you're thinking about it on Thursday, you're planning it out Friday, you might already be in it by Friday, and look at Sunday afternoon, you get the exact price you want. That's the moneymaker. Okay? The following Monday before, okay, you tried it and it didn't work. Okay. And the following Sunday, you tried it again and again. Okay, so you might have made a little bit of money in here. You might have made a little bit of money in here. And you made a lot of money here. You can see that the consistency comes from you, your analysis, your plan, your bias. The market is inconsistent. Okay? A pro trader said something about a typhoon in Japan. No, that strengthens the yen. So, let's say here's Japan. Here's a big island, right? And a hurricane comes through. If it creates a lot of damage, people in Japan they're going to need to bring money home to repair their homes and such. Get their life back on track. And that remember, because of zero interest rates for 30 years, the Japanese public or the Japanese housewife has been investing money overseas. They've been carry trading. So suddenly when you need 10 grand to put a new roof on your house, you take some money out of your investment pile and you bring it home. That will create yen strength. If there's no damage in Japan, no need to tap the savings. Okay? Okay? Easy peasy lemon squeezy. Hopefully that makes sense. Remember, I always try to give you answers that you understand. My goal is for you to understand, not to memorize, not to have rules of thumb. I want you to understand. Okay. And then let's do beast. This one is started with a counter trend and then just took off. Cool. But we did have this set up. If we don't have it here, we have it on a different pound yen chart somewhere else. But this is a very basic role reversal. Perfect. So there's your double bottom. There's your higher high, higher low, 1, 2, 3, hammock, hammock. Okay? Make sense? Are you starting to see it now? I mean, how many times have I taught you that? 1,000? And then, of course, to add to this, very, very basic swing. Okay, that's a swing long. Swing long, sweet pound yen. And there's your rule reversal. Cool, right? Coming for to carry me home. Yeah. Yeah, boy. Try to get this chat in the right place. It's never quite in the right place. Because now I have to have 2 different pieces of software running to run the webinar. I only needed one a week ago. I wonder what YouTube is thinking. Hey, let's ruin it for all the streamers in the world. All right, anyways, I'm back. Is that a 618? I guess it is, right? Yeah, sure. I don't care about that, though. Okay. I laugh at Fibonacci, actually, Joel. Like, do you honestly believe Fibonacci works because it's the way that sea stars grow their spots, or that trees grow their branches, right? Like, do you honestly think that that's why it works? I don't. So I think you could change your, and you could say 33%, 50%, 66%, right? 33, 66. I think it would work fine. Or I think you could go 25, 50, 75, and it'll work just fine. It's just a retracement. Think of it as a discount. You know you want to buy, but you want a better price. Well, how much better of a price do you need? It's not because of how, you know, flower petals or the hairs on a bumblebee, you know, like, no. No. Cool. So anyways, check it out. That's going to be a big one. So there's going to be a retracement. Okay, you probably want to start thinking about that now. Okay. The target for this is obvious. Is 39, 139. So there's still 250 pips left in this, but you won't get it today. That's next week's trade. Okay. Well, CAD is Oscar Mike. There was news over the evening where there was an attack on an oil tanker again, and that drove up oil prices. So why don't we take a look at that now? This isn't about Aussie. This is about yen. So I just showed you 4 currency pairs went straight up like a rocket ship. So it has nothing to do with the Aussie. If CAD also went up, if CAD went up, if Kiwi went up, if pound went up, if euro went up, the congruency there isn't that Aussie strong. The congruency is that the yen is weak. Okay. Also, understand, guys, in your analysis of currency valuations, remember, it's not that they cut. That's not what makes things strong or weak. Is if the market thinks they're going to cut again or not cut again. Okay? Soon as the Reserve Bank of Australia says we're done cutting interest rates, this is the bottom, then the Aussie dollar will get strong. And you're like, but they just cut interest rates by a bajillion %. Yeah, they totally did. But that's over. There's a new policy, and it's the policy you need to be, the change in policy that you need to be trading. All right, so Beast we did, CAD we did, Kiwi Swiss franc. Okay, this is one that I did for you guys in this swing trading group as well. Okay, here's the obvious bottom. Here's the higher high. Higher than this. So somewhere around here, as you can see, and I've drawn it, the trade plan is buy somewhere around this 62.50 mark and have it go up. And then based on that, we got more specific numbers. And I said more specifically, we want to either buy here or we want to buy here. It's 62.35. Oh, there it is. Okay, this is the regression channel. It looks like we got perfect standard deviation from the mean? Or was it Fibonacci? That's because sea corals grow their skin patterns this way. Yeah, okay, well, it's approximately 618. It's exactly the central pivot point for the previous week. It's exactly the M2 this week. Maybe it has nothing to do with how sea stars grow patterns on their skin. Okay, maybe this is just a decent place to buy. So I had somewhere between 50 and 35. Well, it was 35. Boom, gone. And now we should be heading up to an M4. Okay. And the actual target is here. Again, guys, this is Friday. I didn't even do this trade plan this week. I want you to think about that. We did this last Thursday, October 1st, maybe October 2nd. That's right, Raven. I want you to think about that seriously. All of these trades that we're now producing, we set up 8 days ago. Now we're getting paid. Well, of course we're getting paid. But think of that as your new trading style. That is where I'm pushing and pulling and begging and pleading. Okay? If you're missing these, I hope you feel like your pants are on fire and that the strategy I teach you every single day is like a bucket of ice water. Sav said October 3rd. Okay, October 3rd. No, but that's a Friday. I did it on Thursday morning. Okay. Anyways. So I don't know. It's the 10th today, isn't it? Friday. Yeah, I guess it was the 3rd. So it would have been here then, right in the middle here. Cool. Takes a lot of planning, right? The rest is pretty easy. So if you're missing these things, I'd like you to ask yourself why. Why do you refuse to plan? I think I've pointed out by now how important it is to plan your trades in advance. So I would honestly spend time with myself over the weekend and try to figure out why. Why are you fighting me on this idea? Yeah, Elliot, don't call them starfish. They hate it. Would it be okay to be in boot camp and the swing trading group? Yeah, there's no cap on learning. Okay? But it's really designed, the swing trading group is really designed for you to have already taken the swing trading, or all the courses. It's not a good place to come in and say, what is a 5A cross? What, is this a good place to buy or sell? Like, dude, you're supposed to know that by then, right? So the swing trading group is not designed to teach. We're just setting up our trades together. Okay? I often do teach. I don't intend to. I don't really mean to. But we get into very interesting conversations. And sometimes I go deep. But it's designed really just set things up. Yeah, then you'll be perfectly fine. Yeah, swing trading is designed for people that really only have an hour or two a week to trade. Okay, because we're getting rid of spot trading, we're getting rid of news trading, we're getting rid of scalping, right? And fundamentals, guys, fundamentals change once a year, maybe, right? If it's a big year, the fundamentals change twice. So fundamental analysis doesn't take much. You know what I mean? And we meet on Thursday mornings to set up trades that'll happen maybe Thursday, maybe Friday, maybe Monday, maybe Tuesday. So we're looking at things well in advance. So you need maybe an hour a week to be a swing trader. To be a full-time swing trader probably takes an hour a week. You know what I mean? But like I said, make sure you take all the courses. Right? It's not designed for me to teach you fundamentals and technicals and strategies and trader psychology and all. No, it's just a swing trading group. If you don't know how to swing trade, don't join the group. Take the swing trading course. Yeah. So anyways, enough of that. Let's look. Oh, I guess we should actually talk about oil here. So a little bit of support found here. Now, do you remember 2, 3, or 4 times now we've talked about whether you thought oil was going to go below 50 or go back up to 60? So that's all it comes down to, guys, and that's a bias. Do you think oil is going to go to 40 or do you think it's going to go to 60? Well, since I asked you that question, it's gone from 51.5 to 54.5. Okay. Well, trade balance has to do with whether you're an importer or exporter. Okay. So, for example, Australia would like a weak currency. Now it's got one. It's had a strong currency for a very long time. So their prayers have been answered. Of course, they don't feel that way, but... All right, so if you had that opinion that you thought oil would go up, not down, the weekly swing trade was here. Amateur hour. So ridiculously easy. Okay? See what I mean? Child's play. Okay? It's starting to do it. Good. We haven't hit the target or anything. Well, that's going to squeeze our pivots. So now it looks more like that. Easy. Okay. Yeah, the pound is moving. There's a comment here like pound's moving on everything. Pound is moving because it looks like things are going well between the UK and Ireland. Which is funny because the relationship has never gone well. So I kind of... But that's what they're talking about here in America. I'm like, wait. Wait. The relationship between Ireland and the king is strained, let's say. All right. So gold, a little dip, now some sideways action. Cool. Okay, great. Vader says, yeah, I would rather take the short where my take profit is. Well, that's why that works. Okay. But that's, you're just stop hunting. But that's fine, Vader. It's just a very short-term point of view. Okay. Right. But if you want to give me the meat, feel free to eat the potatoes. Feel free, brah. Okay. So I'm trying to teach you to get on the bigger moves. Okay? So like for example, This is the most important bullish price for euro dollar for the month of October. Okay? Not this one, 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 not this one. That specific price of 108, what was it, 108.89? 108.85. It's actually not that one, it's this one, but anyway, 89 I think, okay? 108.89. We knew that here, here, and here. Okay? So if you are a bull, that would have been a great entry. Now, I think if you were doing this earlier, like I said, a week or two before October, so if you're still in the middle of September, I think the trade plan would have been something like this. So this is what I call an Arctic turtle, where someone just squeezes in this pivot and then pops back into the old plan. And it has to do with some people being on daily charts and other people being on hourly charts, and you know, they see the same thing, but there's a bit of fuzziness between the time frames. But that's a bullish entry, that's a bullish entry, it all works out just nice. Then the following week, okay, the following week, and let's do this in a new color. This is the buy zone, okay? And the trade plan this week was pretty straightforward on this, okay? Okay. Once again, it's just swing trading. That's all that is. No, Max, M1 is a get out pivot, not a get in. And someone sent me an email yesterday, and I've forgotten who, about they know, like, all they know is, you know, the green zone means buy and the red zone means sell. I'm like, no, whoa, it does not. Okay? No. These green areas don't mean buy, the red areas don't mean sell. Red means down, green means up, but you're way ridiculously oversimplifying and you're missing almost the entire point, right? Like, I'm going for M4 so I can get out at M4. Yes, you can sell that. That's a counter trend trade and it's a scalp and you're stop hunting. You can pick up some pips that way, but that's not the point. Okay. Okay, so you gotta like buy the book or take the course or something. I mean, I've explained it a bajillion times. Granted, I've been teaching people this for 15 years, so maybe I don't know. I should be happy to do it over and over again, but like, take the course, dude. Just take the course. Just take the course. All right. Or read the book. Also, is it in the free videos on YouTube? The free training videos? I think it is, isn't it? youtube.com/fxbootcamp. A little slow while I'm broadcasting.
U.S. markets is driving some investors to foreign currency. Joining us again from Atlanta with some tips on trading and foreign money is Wayne McDonald. He's chief currency coach at Forex's FX Bootcamp. Wayne, good to see
It explains in here, doesn't it?
you. Well, look.
There's no magic, Jesus. It just, that's what you're supposed to do.
So I want to look.
So you have to understand, Jesus, it's all about self-fulfilling prophecy. If I have taught, let's say, 25,000 people how to trade properly, then they're all doing the same thing. And that's why it works. So there's no magic. Everybody on the planet that knows how to trade knows to buy at M2. Understand?
Hey everyone, welcome to the presentation for the Daily FX audience entitled How to Improve the Timing of Your Trades Using Oscillators. Now, testing, 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, 377. Hey, welcome
I think it's
to the
366.
Daily FX presentation on how to improve the timing of your trades. In this presentation, we're going to focus on how to use Leonardo Fibonacci. Now, Hello. Welcome to the presentation for the Daily FX trading audience. You've made it to the presentation. I think there's a few chairs in the back. Go ahead, grab one, make yourself comfortable. There's some donuts and coffee. Enjoy. Topic of the presentation today is how to improve the timing of your trades. In previous presentations, we talked about how to use moving averages. We've talked about how to use oscillators. We've talked about how to use Fibonacci retracements to get into a trade. Now let's talk about Fibonacci extensions.
All right, so it doesn't cover pivot points. All right. Anyways. Wayne, please, I find it difficult to download your template from FX Boot. All right, are you, first of all, you're supposed to be on MetaTraders now. I sound young? Yeah, it was 10 years ago. Or what year was that? Oh, I already closed it. That might have been 13 years ago. Okay. Lennox, youtube.com/FXBootcamp. Yeah, so Daniel, metatraders.com. And it works in a completely different way, using completely different technology, using a completely different strategy. So now you could you log into your members area and you click it and you download it. Works much different, okay? It is 377? Okay, cool. Yeah, anyway, so pretty straightforward here. Again, I hope you write this down and walk away with this as a jewel that you've collected. That the consistency of you carrying out your trading bias. So if you're a bull on euro dollar, you're a bull yesterday, you're a bull last week, you're a bull last month, you're a bull today, you're a bull tomorrow, and you're a bull all next week. Okay? And it's that your consistency of setting up trade plans properly in a consistent fashion will lead to consistent results. Because you're bringing consistency. Just think of the logic there. You're bringing consistency. So how much money you make comes down to whether the market is in that mode. Because by the way, the market goes from bull to bear to bull to bear to bear to bull to bull to bear to bear to bull to bull to bear, and it's all over the place on all time frames. So on an hourly chart, it can be bearish all day and then suddenly turn bullish, and then on a 4 hour, it's it's generally bearish most of the week, and for on a daily, it might be bearish for a week or two, but then bullish for 3 weeks straight or 3 months straight. And you got all these different forces going on in every different time frame. And that's why using things that tell you if the euro is bullish or not, they're a double-edged sword, because if you don't know what they're telling you, besides a green arrow or something, you don't even know on what time frame it's talking about or how it came to that conclusion. Maybe all it's doing is telling you MACD is up, but MACD doesn't tell you anything either. So you got to be careful because most of those tools are stupid. Most of them, right? So anyways, if the market can be bullish and bearish on multiple different time frames, right? And you keep switching from bull to bear several times a day or several times a week or several times a month, you're trading. Well, that inconsistency in an inconsistent market is mathematically impossible for you to succeed on the long run. Even on the short run, it's not likely. It's improbable. Somewhere between improbable and impossible. So if you instead bring consistency on the times the market is going in your favor, you'll make money. And then the times when the market's not going in your favor, you won't make as much money. But you'll still likely make money. Okay? And that's all that's happening here. But you should see, if you're a bull, this is incredibly easy trading. It's really, really incredibly easy trading. So if you're overcomplicating things because you're not consistent, I hope you hear my message. If you're a bull, this is a very easy monthly swing. Super straightforward, right out of the textbook. The timing is perfect. The price is perfect. It's like sickening, ridiculously easy. And same for this one. Right? Higher high, higher low off the central pivot. Like, dude, seriously? What? Right? What? Did I call it? What do you mean call this? Oh, I called this? No, but I don't call trades though. I don't call trades. There's no need to call trades. I'm getting rid of that mentality, Max. Even calling trades. What do you mean calling trades? That's guessing. You have been a bull or a bear on euro dollar for months now, whatever it is. And every single day, there's always a trade. Now, does the trade set up? Not always. Is the trade profitable? Not always. But there's always a trade. Always a trade. Okay? That one didn't even say. Okay? The thing is, when the market agrees, you're going to get paid. This is a bullish entry. You must understand, Max, there is no other bullish setup on a monthly basis. There isn't. That's what I'm saying. It's definitional. It's not me calling a trade. If you are a bull and you know how to swing trade, right? You've gone through the course. You will know, right? This is clarity now. You will know that there is no other up trade. Right? Okay? On a weekly basis, this is your trade. It's definitional. It's not me calling it. If you're a bull, you buy there. If you don't buy there, you're not a bull. And oh my God, setting it up off of this, of course you're going to kick it off the monthly. So you're thinking, well, somewhere between here and here is my plan A, and this is my plan B. It's very, very definitional. It's not calling trades. You're like, oh, I'm a bull, so I'm buying off this monthly. Why? Because that's it. It's the only one. It's a very factual, definitional type trade. It's not a guess. It's not anything else. Okay? And then now what you're up here, well, you're a bull. You were a bull the week before and made money, and now this week you're going to be a bull again because you were a bull the week before and didn't make money, but you're still a bull because of your fundamental analysis. So you know, and you're like, okay, well, using the monthly strategy, I got to kick off this monthly central. Using my weekly strategy, I want to kick off the weekly central. So I know that's right around 109.50. So I probably want to get long around 109.50. Oh, boom, it worked. Of course it worked. You understand? Thank you, Neon. Okay? Okay? Cool. So, based on the same definitional trading, there's going to be some profit taking and some up. Now, here's the interesting thing. Based on this is our target. We knew that the beginning of last week, 14 days ago, or I guess, what is it, the 11th? 11 days ago. That was the assumption if you're a bull. Now, I want you to clearly understand. Does this make you a bull? 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 None of this makes you a bull. You're either a bull or you're not a bull. Okay? Now, let's switch this. If you were a bear, cool. Do I care if you're a bull or a bear? No. Doesn't matter to me. Okay? There's your entry for October. That's your price. Okay? So maybe earlier in the week you took a shot here. Now let me change colors, okay? Maybe somewhere in here because you're trying to capture the monthly M3 and you're trying to capture the weekly M3. Okay? And you're going to play it kind of like a role reversal kind of thing, right? You understand, like, if you played that right, you didn't lose money? So, the only thing, guys, the only thing that separates a bull from a bear are market conditions. Whether you're profitable or not, I mean. There's no luck, there's no calling of a trade, there's no gambling, all that kind of stuff, right? I want you to be consistent. So if you are bullish on this pair based on long-term fundamentals, then this was your buy for the month. And if you are a bear based on your long-term fundamentals, this was your trade plan. Which one made money? Well, in this particular case, the bulls won. Next time it'll be the bears. But I want you to be prepared. So like what's happening now, once again, is irrelevant. It's irrelevant. There's likely going to be some profit taking, okay? Which means the market will come down like this, and then if you are a bull, your next plan is this. So I'm a bull. Do I buy this? No. I need it to fall. I'd like it to retrace maybe all the way back to 110. Probably not going to happen today. Probably be Monday or Tuesday. It's a trade plan. Will it happen? I don't know. I don't know what'll happen. I don't know the future. I can tell you though, if I'm bullish and I bought here like I was supposed to, and of course I bought here like I'm supposed to, then I'm going to do, let's do it this way. Then I'm going to buy here like I'm supposed to. Why pivot strategy wouldn't work well? I never said that, Boris. You misunderstood. What I was talking about had more to do with the yen being a funding currency. Okay? And most times, so here's how I think about it. So let's be clear, this is my opinion. The two most important, or let's say three, the three most important currencies in the world: dollar, yen, and Swissy. It has to do with fundamentals, macroeconomics. So, Euro and Aussie and Kiwi and CAD, they have their own play too. So those ones, Aussie, Kiwi, CAD, and I guess you could probably throw Nokia in there. Those are commodities. They're exporting nations, and I might group them together from time to time. So like I would never trade Aussie versus Kiwi or Aussie versus CAD or Kiwi versus CAD or Kiwi versus Noki or Noki versus Aussie. I wouldn't trade them against each other. Right? And then I suppose what I used to do is lump the pound and the euro together because they used to have such a high correlation and stuff. But now they have their own different problems, right? So I don't tend to trade these things against each other. Now, if I saw pound was weak and all commodities were up, I would probably sell the pound versus all commodities. Okay? If I saw the dollar was weak, right, I would try to sell dollar against anything else that would be strong. I would look at commodities as basically one thing. I'd look at the Europeans, the other, and see maybe if I can get some trades on. If I see yen is weak across the board, I'm going to take this, or yen, let's say. So right now I lump these two together. Typically I'd throw in dollar, but dollar's got Fed on it. So I trade the dollar like it's Fed. I trade the yen and Swissy like they're the same because they're now the funding currencies for global macro. So if commodities are up and these are down, I'm long Aussie yen, long Aussie Swissy, long Kiwi yen, long Kiwi Swissy, long, right? And I'm putting things into place based on macroeconomics, okay? And I'm lumping things together in very specific ways. Now, not all, these four are not all going to be the same strong or the same weakness. So I'll still need to do some sort of relative strength, right? And Aussie and Kiwi have a lot in related, so I might just consider these two the same and say Aussie, Kiwi are probably the same, and I might look at CAD differently and I might look at Noki differently, right? One is North American oil and the other one is European oil, okay? And then that's why I'm treating them as commodities. Okay, so then someone else here comes along and says, Wayne, look at Aussie CAD. And I'm like, why would you trade Aussie CAD, right? Or you're like, let's look at Euro Pound. I'm like, okay, sometimes that's good, sometimes that's bad. Or Pound CAD. And I'm like, it's really confusing. What is it that you're doing? Are you trading European economic data versus a commodity play? Right? You see, like, it doesn't make sense to me. Then you'll say, well, over the last 2 days, CAD's been strong and pound's been weak or whatever. And I'm like, oh, over the last 2 days. Well, I'm planning things like 2, 3, 4 weeks in advance. You understand? So like, oh, I see you're putting strong versus weak, backward looking into a current moment, right? So if let's say pound has been strong the last couple of days and CAD's, and let's say Aussie has been weak the last couple of days, well, it doesn't mean today or tomorrow it's going to be weak. All it means is it has been maybe a matchup, but it's all after the fact. So it doesn't tell me anything about the future. You're only trading the past, and I'm trying to predict the future. I'm not even worried about tomorrow. You have to understand, guys, I'm done for next week. And I'm probably done for the rest of October. Like, I'm already in November. So like trading an Aussie, a Euro Aussie trade based on what happened over the last 72 hours, I'm not interested in. I'm already 2 weeks out. I'm already on the next game, man. I've changed the channel and moved on, right? I'm already binging on a new series, right? So to be able to do this, I have to look at currencies as products, as asset classes, not just pure strong versus weak, because that's too backward looking. So like these trades that are now working, like I said, we set them up 8 or 9 days ago. We had to wait 5 or 6 days for the trade to actually kick through. But then it kicked through. But I'm thinking that far ahead where it takes days and days and days and days and days and then off it goes. Does that make sense? Cool. I'm missing. Was there a question? Sorry, I was answering your questions. Looks like there's been a chat battle going on. I can't quite tell. Oswald, are you heckling or are you positively contributing? I can't quite tell. Sorry, I was actually answering questions. That I was trying to move toward that approach. Yeah. Well, it's just that's how I've always had to do it. Right? So if you don't know, let's say the personality, or let's say you don't know the economics behind each currency, then to you like a pound and Kiwi are the same thing. Right? But I don't look at them as the same thing. I see New Zealand is let's say a China play. I see the pound as Brexit. Okay? So like the US playing nicely with China would make Aussie go up, would make Kiwi go up. That's how I look at that. Okay? And it should weaken the US dollar. Okay. So John says, what's the main point to consider to choose the best pairs to trade on that day? We're bigger than that. It's not a daily process. Okay? You want, you need, let's pick a I don't want to do euro dollar for that. Okay, let's do pound yen. Okay. Okay. You need to be a bull or a bear on this in general. Okay. That's your $1 million question. Okay. Your $1 million question is simply, are you a buyer of this or you're not a buyer of this? Okay. It's similar to making a decision on like real estate. You're going to own it for 25 years. You don't know what the neighborhood's going to be like in 25 years. You don't know what the economy is going to be like in 2 years, but in 25 years, you have no idea. You don't know what interest rates are going to be. You don't know what real estate valuations are going to be. And then there's always just risks that you don't even know of. You don't even know of the things you don't know of. Okay? So, but you still need to make a decision. You're either a buyer in this city or you're a buyer in this neighborhood or you're not. And ideally you've done some sort of research, right? So like, do you like real estate in Colorado? Do you prefer real estate in Denver? Do you prefer real estate in downtown Denver versus a suburb of Denver? And how does this compare to like Boulder or Fort Collins? Okay. And then there's subcomponents of that, right? these are bigger kind of opinions. So is Brexit going to destroy the Great British Pound? Will the United States go into recession, which would force the Fed into QE? Right? What will the global economy look like in 5 years? I want you to think of your currency trading that way, much bigger than today or tomorrow. Because I'll tell you what, on the smaller time frames, timing and volatility are risks, okay, that are not seen really in like swing trading. And when newer traders are not that good in understanding fundamentals, and they're not that good at setting up trade plans, and they're not that good at understanding even basic correlations and basic, what role these currency play in a global market. When they don't know any of these things, they're stuck on the small time frames, and it ends up being a lot like a video game. You're trying your best and you're using tools and stuff, and you're like, you're trading crosses and but I think you'll find, if you survive a few years of doing that, I think you'll find that it just feels incomplete. Okay? And that you might be in good trades a lot, but a piece of news comes out, jumps 30 pips, and knocks you out for a loss. That's volatility. Or it was down for 2 days and you were buying the whole time, and then you stop trading and you start selling, and then it starts going up for 2 days, and you're like, well, go dang it. If I buy it, it falls, and if I sell it, it rises. Okay? And these are things that are inherent when you're thinking about, like, well, what should I do today? That's the problem right there. That you're trying to figure out what to do for the day. I'd rather you just say, based on some sort of weird analysis, even if it's flip a coin, you're a buyer of pound yen only. Or if you don't like the pound yen, do Aussie yen or Kiwi yen or CAD yen or whatever. But to me, it's a yen play, and that's why when you're talking crosses, I don't trade crosses. I trade macros, right? And right, there probably isn't a lot of trade between Europe and New Zealand, right? But there's a lot of trade going on between, let's say, within Asia Pacific, right, and specifically China. So Kiwi's going to move more like that. So I trade based on sort of the longer term business. So I don't think this is coming across well. I'm getting heckled like crazy, and I don't know where it's coming from. So this is not the message you want to hear? You just want to trade 1 minute charts? It's weird, man. So I'm getting, obviously, messages are being blocked because people are cursing at me and calling me names. I'm like, really? Wow. I'm like, such angry people. I don't even know what you'd be angry about, but anyways. Cool. I guess we will not talk about that anymore. And I guess you're mad that I'm telling you it's easy and you're not getting it or something. Is that what it is? I say, look, this is very definitional. This is very straightforward. If you had a bias, you would have bought here. Is that the part that's not coming across well? You're like, is that coming across arrogant and stuff? Right? I've been told many times that I'm an arrogant son of a bitch. But to me, it's just definitional. It's just the job. It's as complicated as putting labels on a can. And I'm working in a canning factory. And, oh, more cans are coming. Oh, stick more labels on. Well, Edward says if you do it enough, it becomes easy. That's true. But my message was that many people here are trying different things and trying new things and doing this and trying that. That's not working, so let's do this other thing. And, you know, and there's no consistency. Like, that is impossible to find success at, right? What is the best way to come up with a bias? Fundamental and technical analysis. If that doesn't work, flip a coin. Now, what did I say? I said isolate the dollar, isolate the yen, isolate the Swiss franc. And then I said yen and Swiss franc are basically the same thing. So really, come get it down to two different things. What are you going to do with the US dollar? Are you a buyer or you're a seller? And I mean for 2 or 3 months. Do like at 100 days. What? What can you do if you can't afford the course? Get a job. Get 2 jobs. Get 3 jobs. Okay. So anyways, I would say what do you want to do with the US dollar and why? Okay, I think that's a pretty easy question if you know fundamentals. It's a very easy question. You can watch, like I explained it last week and the week before, maybe even earlier than that. If you take the fundamentals course, which I think I'm going to rename monetary policy course. It's not necessarily, I mean, it's part of fundamentals, but it's monetary policy. So like if you know what the Fed's doing, you know what the dollar's likely to be doing. It's a very, again, simple question if you know the fundamentals or what monetary policy of the reserve currency is and how it impacts its value. If you understand that, it's like reciting ABCs. And if you don't, then it's very confusing. You're like, I don't understand all of this. And therefore, then your trading will be inconsistent with that, right? So anyways, you come up with a bias for the dollar. Okay? Then the next thing is come up with your bias for the Japanese yen. And once again, that has to do with global macroeconomics. So somebody says, there's a typhoon or something heading toward Japan, that would be bad, I think is what they were saying, and that would weaken the yen. I'm like, no, you're not correct on that. Yes, a typhoon would be bad for Japan. It wouldn't be good. So yes, the typhoon would be bad, but that strengthens the yen. But people, and I guess it's natural and normal, they think bad weakens, good strengthens. But that's not true. It's not true, right? Okay. I'm just reading your comments, guys. Yeah. Chrissy says, I think a lot of these are turtle traders and they're just they don't want a bunch of 1% Harvard people again. So fundamentals are going way over there. Well, first of all, I've only been a Harvard asshole for 6 months. So hopefully you don't hold that against me. Yeah. Look, fundamentals are not that complicated. Right? So here's what I do. Someone said, what if they don't have money for the course? Okay, I don't think it's a lot of money, but okay, let's say you don't have money. Great. Take a university course online. Go to like edX. Cost you $20. Okay? and take 2 or 3 of them. So you go to beginning to intermediate, intermediate, and then take it advanced. So take 4 economic classes. That'll be total of less than $100. I took one on edX maybe 3 years ago, and it was run by the IMF. It was really cool. Very complicated though. So I would leave that last, but like, just get an education. Like, it's cheap. You just have to spend a few hours a day studying. But like, why would that stop anyone? That process is, I think, what holds people back. And that I can't impact. If I say, when someone says, Wayne, I want to be a successful anything. I want to be a successful race car driver, but I don't want to take a class on racing. I don't want to learn braking and pedaling and steering, and I don't even like cars. I don't want to drive. Well, dude, you're not going to be a good, right? I want to fly airplanes, but I'm afraid of heights. I don't want to go, right? I mean, what are you talking about? I understand flying an airplane costs $350 an hour. Fly in a simulator, right? So it should be, if you get to the point where you're like, I'm starting to see, right? I'm starting to see that these fundamentals are important, and you don't have a lot of money, spend the next 2 or 3 years taking courses, university level courses with textbooks, and study. I don't care if it's your community college. I don't care if it's an online university. Honestly, Harvard's really good, actually. I was going to say Harvard wasn't much different. All right, so Harvard was different. But the end result, I think, will be the same. Okay, this is not over your head. It's not expensive. You just have to learn it. But if you're not willing to do that, that's the issue that I think is going to hold you back from success. Right? Well, that's true, right? John Bryan says most people out there think trading is an easy way to gain money. But that mental attitude, almost by definition, means that they're poor. So they need to break that cycle. And I'm hoping if that's the case, I can help them break that cycle. Like, it's a fool's dream. So if they think that, they're thinking foolishly. And if they continue to behave that way, they are fools. Now, if someone says, now I know what I need to be focused on, so now I can change my life in a positive way, I can take care of myself, I can take care of my loved ones, I can take care of my family, I can get better friends and move to a better neighborhood and all this kind of stuff. All I have to do is spend the next couple of years getting a solid education and practice trading. Like, if they can make that switch and then do it, it changes everything. And the cool thing about how humans work is that we capture value throughout our life. Through experience, all kinds of experience, life experience, work experience, love, pain, agony, defeat, all these different things we carry with us. And then we teach either our children or I like to teach, so I teach my children, but I teach you, I like teaching at universities and stuff. You can share the sum of your entire life. You can write it down in a book, everything you learned in your entire life, and leave it for humanity. And it's kind of cool that you can go to a library, pull out a book that's 50 years old, 100 years old, 300 years old, 1,000 years old, and read the sum and gain the sum of someone's life. You can read The Art of War and know what the battlefield looked like, what people were thinking and feeling, and what the weather was like that morning, and what people had for breakfast. It's amazing. Okay? And you can gather that and gain that, and then make that your own and then share it with other people. Right? So you can make this massive radical change, and it will change your life. It'll change the life of people around you. Okay? Don't be shocked if you find that creates stress in your family and you lose some friends. That's part of the risk. You are going to become smarter. You are going to fix your money problems. And then your relationships in your life will begin to change. And very often for the positive. Okay? Okay. So anyways, I hope people understand I'm trying to give them the hardcore, raw, honest truth. But if you have a basic trade plan, I'm not talking about you need to be an engineer. I'm not saying you need to be a doctor. I'm not saying you need to be a PhD. I'm not saying you need a master's degree in economics from Harvard. I'm saying if you think oil is going to stay above 50, you should start considering buying. Money changes people. Money changes. The question here is why does it cause stress in the family? It changes people. Money is a strange thing. It'll change you, but it'll change. Like, so you can just get new friends, right? But your brothers and sisters and your aunts and uncles and your mom and dad are always going to be there. And what if you made 10 times more money than your friends? You start going on vacations to amazing, gorgeous places, and they can't go with you. And then you go to share your experiences. You're like, oh, it was so great. We jumped off the waterfall. It was just fantastic. And they're like, they don't like it. They just don't. It changes people. Or people start borrowing money from you, and you're rich. Why don't you share me? You're like, well, why don't you go to university like I did for 2 or 3 years learning economics and taking 2 jobs so I can trade Forex and pay for things and save money to invest? Like, like just think of it. If most people are not willing to do what you did to succeed, most people, and that means people you love as well, and they're not willing to do the hard work and plan ahead and make all the sacrifices, blood, sweat, and tears. They just want your money. It gets weird. It gets weird. Max says, if oil stays above 50, what pairs should one be a bull or bear on? Well, you tell me. Who exports oil? And do those countries benefit from higher oil prices, or are they hurt by higher oil prices? Answer that question, Max. Fader says, bypass doing it for the money and do it to me. Yeah, I agree with that, Fader, but it does. That's for you. That's your personal internal clock, so to speak, or compass. People around you are not going to have the same one. All right, so let's answer this. Pro Trader says hurt. Okay, Canada sells oil. Okay, let's pick on Canada. I have family in the oil business, by the way. And I have an uncle. I'll keep his story out of it. But he was telling me on the border between Alberta and Saskatchewan, there's a town called Lloydminster. And basically, it's a town next to a bunch of oil rigs. And a refinery, too, I think. But anyways, oil. And they drilled that oil, I don't know, in the 50s, maybe the 60s. Okay? The infrastructure was built. The pipes were laid 30, 40 years ago and have been paid for. Depreciated down to a value of 0. So he was telling me that it's all automated now too. He said, so there's one guy, and he's there in case the place catches on fire and he hits a button. Like, you got to pay that guy $6 an hour. He said the oil was coming out of the ground at $3 per barrel. But it cost them more than $3 a barrel to buy the barrel. The barrel had a higher value to them than the oil. Okay. So let's just say, let's say it's $6. Now, they need to sell this Canadian oil. It was selling for $50, but let's say now it sells for $60. What is the input cost for Canada? Prices have gone from 50 to 60. What's the input cost? Well, $3 for the oil, $3 for the barrel. $6. Prices go up from 50 to 60. So let's bust out the math. Whoa, look at that, boom. Okay, it was 50 minus their $6. So they were making $44 a barrel profit. Now it's $60 minus 6 because the oil comes out of the ground at the same price. You understand? It's just coming out of the ground all day, every day. It just comes out of the ground. That doesn't change. Like, the process doesn't change. It's been, the pipes and everything have been paid for a generation ago. It's just coming out of the ground. You can't even stop it. I mean, you can, but it just comes out of the ground. So you're like, hey, I need another barrel. I mean, and the barrels they're still $3. So it's still $6. But now people are willing to pay you $60 for it. And you're like, okay. So now you make $54 profit. The infrastructure hasn't changed. The people haven't changed. The oil hasn't changed. The only thing that's changed is prices went from 50 to 60. So is Canada benefiting from oil prices going up, or are they being hurt? Here we go, pro traders going to the next level. But oil's more expensive, so there's less demand. Really? All right. You drive to work every day. You drive, I have neighbors here. They work at Coca-Cola. All right. Coca-Cola is in Midtown Atlanta. What is that, 20 miles? I guess probably 20 miles. So they drive 40 miles a day to work. Okay? Per day. 200 a week. We're not talking, they also take their kids to soccer and all that. We're just talking to work. 20 miles, so 800 to, right? At least 800 miles a month. Okay? So they need 40 gallons a month to go to work. If they don't go to work, they can't afford their mortgage. They can't afford their car, which is funny because they don't need a car if they worked at home. Okay? All that kind of stuff. If they don't buy 40 gallons of gasoline, their children starve while they all shiver in the cold. Okay? So let's go with this idea. Gasoline prices go from, what is it now? I don't even buy gas. What is it, $2.50? All right, so oil prices go from $2.50 a gallon to $3. Do you still buy the 40 gallons? We're doing behavioral finance again, guys. Behavioral finance. I don't know what you're going to do. Okay. All right. More geopolitical risk. Oil goes from $3 right now to $3.50. Do you still go to work? Yeah, but now it's $4. It costs you $160 a month. You make $15,000 a month working for Coca-Cola. But golly gee whiz, you spend $160 a month. Now it goes to $5. Something horrible is happening in the world. $5 a gallon. Now you're spending $200 a month to go to work. You go to work, dude. Okay, demand is very sticky. So when you're doing oil, generally speaking, your demand curve is downward sloping and it's fixed. D star. Okay? This is short run. Okay? Short run. Do you know the definition of short run? All variables are fixed. They're not variables, right? You can't change your job. You're not going to go out. You know, you're spending $200 a month now on gas, so you decide to buy a $90,000 Tesla. That doesn't add up. Oh, you decide to get a new job. That doesn't add up too. People don't just switch their jobs. Okay? Especially not over $200. Okay? So, right? Maybe less, but dude, nobody gives a crap about whether you're paying $150 a month or $200 a month. Right? Dude, come on. You're going to drive your car everywhere all the time. Okay? So what changes is the supply. And the supply can shift left. Supply can shift right. Okay? And price, this is supply. And this is price. And so the equilibriums can change. Okay? I guess I could do it this way. As supplies change, okay, see how supplies shift? Prices will shift. But demand on the short run is going to be fixed. Prices are sticky in the short run. Okay? That's actually an economic term. Prices are sticky in the short run. Okay? So, anyways, going back, if oil goes up from 50 to 60, someone's going to benefit. Who's going to benefit? Whoever's selling it. Because it's just buyers competing with each other to buy. Okay? So if there's less supply, they're going to have to fight each other to buy whatever's there. But the demand is always going to be there. Okay? So we jumped from 50 to 60 recently as supply shifted. Demand was constant. Supply shifted from here to here from an exogenous supply shock. Another economic term, specifically for the oil industry. And now supplies have been returned. Demand has been constant. So supply is returned and oil prices return to their price. It's all supply side. Okay? Now, demand destruction on the long run will happen at varying degrees. I think energy specifically will be free. Not in my lifetime. But energy should be completely, totally free. And how do you do that? Well, we have unlimited amounts of energy. I mean, think of it. On a warm day, have you ever just... I do this with my kids. I'm like, put your palm towards the sun. Can you feel that heat? Right? It's millions of miles away. Millions. Right? And I said, then you put it in the shadow, it's cool. At night, it's much cooler, right? That there's all this free energy. Because that's all heat is just energy. So we will get to a place, humanity will get to a place where all energy is free. Okay? It's like a freemium kind of model or something, right? Like reverse freemium. You buy the apparatus and put it on your house, and now energy is free. Every house should be off of the grid. Okay? I'm speaking as a venture capitalist and stuff. This goes back a long time too, but every house should have its own independent power supply. That's it. And so one day you'll just buy a house and it'll have a battery pack and a solar panel. Or if we're not going there, maybe it's a hydrogen or something, but there's just some sort of energy source about the size of a hot water heater somewhere in the house. You don't even know, you don't even care. Right? But all that energy is free. But we'll still need things like fertilizer. We'll still need things like plastic. But I'd like to get to a world free of plastic. So at some point, crude oil, carbon, liquid carbon, will just not be as important. So in that case, demand will fall. Cool. But I don't think that's going to impact oil prices today. Anyways, I feel like I've gone too long already today. Oops. Whoa. So this new system doesn't even have a timer. It's weird. I need to yell at YouTube. Wow, they really mess things up. So I don't know how long I've been going. What time is it? Yeah, I've been going a little long. Well, do you have any other questions? Why don't I answer some questions and then we'll go for the weekend. Max says, why long pound? Well, as you probably know, the Prime Minister of the UK and the Prime Minister of Ireland are working on a Brexit deal. That's good for the pound. Also, as you probably know, the Japanese yen is weak across the board on positive macroeconomics. So that makes it go up. Hour and 39. Thank you, guys. I'm more interested in after the deal than before the deal. Okay. Any questions, guys? Pound dollar? You want to talk pound dollar? I liked pound Swissy better, but or here's the Aussie Swissy. Beautiful, huh? It took a week and a half to get the trade to break. But you're on this, right? Yeah, anything risk on is doing extremely well, right? So ZAR is doing all right. Peso is doing awesome. Oil's going up. Yeah, of course. That has to do with the attack on the ship today, though, not demand or supply. Right? You guys know about that? An Iranian oil tanker was going through the Red Sea and was hit by missiles. I'm assuming you know all these things. What was I doing? Oh yeah. No, you're not understanding what I mean. You wouldn't be going against an exotic. Well, there you go, Hoodoo. Thank you. Hoodoo, absolutely awesome. All right, so guys, let's take a look at this pair. Do you understand? And many of you guys I've known for 10 years. Do you understand that we've never once had a bullish trade plan? Every little piece of analysis here is setting up short trades. Okay? Can anybody confirm that? 2019, 2018, 2017, 2016, 2015. Never once have I set up a long trade. Not once. So you have to understand there's bias. How else do I say it? There's bias. There are plenty of times when this goes up, but I never buy it. Because of the swap, yeah, that's a big part of it. But it's just my intent on peso. Okay. That's all. And so it's the same thing with any of the exotics. I only do one thing, and I do it over and 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 over, and I never do anything else. So there's the trade plan I set up for the swing trading group last week. Okay, it's not perfect, is it? But is it enough to say, once we break through, and by the way, we were still up here. No, we were here 2 weeks ago. This was more than 2 weeks ago. The trade plan is, now that we're at this area, I want to see downward action, upward, right? Roll and then trade it down. All right, so it's not perfect. Took a couple of days, got through that roll reversal. Cool. Oops. Okay. Part of that is I use pivot points in swing trading, as we talk about every single day. Okay. But also, you know my intent on this pair. I sell and I only sell. The strategy that I did over here is what actually worked. Okay? Rejection, right? Breakthrough, roll reversal. There's the breakthrough, there's the roll reversal. Okay? Now, that's cool, right? Now, since I'm only a bear, and I've only been a bear for at least 10 years, we also know how to swing trade, don't we? Of course we do. So, what is the sell zone based on my bias? Give me definition. Don't give, right? Give me the two prices. Give me the two prices on this chart that you know factually that I would look to trade as a bear. Right? Not my opinion, not your opinion, but a factual price that you know 100% certain as a bear I would take. Wrong. 1950, irrelevant. Irrelevant. Right? No. No. And we're talking about on this week, and then we'll talk about the next one. The red spot. Wrong. Absolutely, completely wrong. Wow, guys. I'm actually very, very shocked you don't know this. Is it hard to see my charts or something? I guess you can't see the price or something? My God, really? This is a huge breakthrough, guys. Everyone is telling me, well, except, who got it? I saw it there, Jim. Jim knows how to trade. All these answers are telling me you don't know. Okay, this is amazing. You need, oh my God, you don't know how to trade. But I show you this 6 or 7 times a day. Oh my God. Wow, thank you. Thank you. I'm glad I asked. Thank you. I'm really, I'm shocked. I'm so shocked. I'm a professor at the front of the class and I just fainted. Yeah, I guess you can't see it, I think. I'm so shocked. So I think some of you guys are thinking next week, which is good. It's not the question I'm asking, but you're thinking next week. That's good. So some of your answers are better. Thank you. But oh my God, holy crap, you don't know how to trade. All right, take notes. Okay, here we go. Let's get rid of this. Wowzer, wow. Amazing. All right, how am I going to do this? All right. Okay. For this week, based on the move I planned 2 weeks ago, this week, without a shadow of a doubt, 19625. Okay? And plan B, 19694. 694. There's my plan A, my plan B. Absolutely, without a shadow of a doubt, a million times over, like clockwork, hardcore, fire for effect, no blink. I did say the red spot. What red spot? Okay, let me get rid of this. It's not this stuff. There's no red spot. Okay, and this would have been here, Monday. Cool. Okay. You have to know this. Oh my God, I'm so shocked. So we've had a massive breakthrough, guys. But it's also telling me that, I mean, I don't know how to say it. You're going to get mad. You feel like you're being sold to or something. You need to take the trading course. Like, you don't know how to trade. That's how, like, shocked I am. I show you this every single day. And clearly, I need to improve. Clearly, I need to improve. We just discovered you don't know how to trade. So I'm going to try to do better. I feel like I tell you 10 times a day. But you need even more help. Yeah, you can't say the numbers, right? No, it doesn't matter. No, I'm not looking at... Okay, let's do this. Yeah, but it doesn't matter. No, don't even look at the lines. Let me try this differently. All right, so templates. Let's go to this one. Okay, cool. Okay. All right. Okay. Would you agree, based on price action, that this would be a reasonable trade plan? I'm not even looking at pivot points. I'm also going to look, well, let's leave it at that. All right. I'm not a bull, though. You understand? But let's say I was a bull. What's the trade plan now? Okay. If I'm a bull, I'm going to look at this as a bounce. It's going to bounce like this and go up. Okay? This is why bias is so important. I have a bias, so I don't think that. But, oops, I wanted that to be a different color. Okay? And of course, if you don't know what you're doing, and of course this is for any currency pair, you get caught in the middle here and you end up losing money. Now, the basis of my fundamentals here is actually this is a flow trade from remittance. And it's a carry trade. What do I mean by carry trade? I only want to sell it. I never, ever, 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 not even once in 10 years have I ever created a bullish trade plan. Okay? Based on leverage, I'll make 900% a year selling it in income, or I lose 4,000% if I'm long-term long. If I'm long-term short, I earn 900% in income. If I'm long-term long, I pay 4,000% in income, in fees. So I wouldn't want to do that. You understand? So therefore, I just never have, and not likely ever will, buy the the USD Mexican peso pair. Unless I'm like scalping or something, but I'm sure I can find something better to scalp than that. So what if all you did was sell this over and over and over again, and you follow rules of engagement? Let's take a look at that idea. Okay. Look at this. No trade. Maybe if you traded this, you made money for 3 days. Right? No trade. No trade. No trade. No trade. You traded, you made a ton of money. No trade. Trade. You made money for 3 or 4 days. No trade. No trade. Trade. Boom. So, some of these trades you made a little bit of money or you broke even. Okay? Okay? In other scenarios, you made a ton of money and it was easy. So here's one, and only did that. No. Here's one. No. And you had that. Okay? What's the difference? Your trading? No. Your strategy? No. Your timing? No. Your prices? No. What's different? Why did these make a little bit of money? Why did these make a lot of money? Market conditions changed. But you didn't. Imagine this is only 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, what was that, 12? 12 weeks. So imagine you carried that out 4 times more. Then you'd have a year. And you're either breaking even, not trading, or making good money. Over the course of a year, this will lead to better results than what you've been doing. But you have to be patient and you have to be disciplined. Okay? And so some of you guys did answer properly, but you were looking at next week's, which is good. So you were answering a slightly different question. So that makes me feel a little better. Maybe I just didn't state the question clearly, and then it's my fault, which is cool. But yeah, if I was a bear, that's what I would do. Okay? Cool. Thank you for being on my team. Thank you for participating and answering questions, and asking questions, answering questions, helping each other, helping me. Thank you for everything that you do. Thank you. Yeah, so peace on earth. May the pips be with you. May our profits be above average. I hope I bring clarity. Remember that part? I hope I bring clarity. You got to see, man. You got to see. So have a wonderful weekend, and see you Monday. Cheers. Oh. Forgot there's like 3 or 4 different buttons here. End. And then I'll end over here.